So I'll say welcome to Day Trading Radio. Tonight's video is going to be a review of the futures today because we had a couple things going on. We did have some selling today in the market, so it was a good example of what to do in a very trendy sell side market. So it's very important that you're going to see some key things to watch and look at. That's really going to keep you out of trouble. It's going to keep you profitable. Again, it all comes down to discipline and patience and activate, and doing it. Everything's good on paper. We can look back and say, oh, this is perfect, but to be there, to pull the trigger, perfect, perfect practice makes perfect. So, like I said, if you do it on the prop accounts, that's great. Take these shots. It doesn't, this is what you want to build your confidence in. A setup where you have a nice divergence, like here, right here, you actually have a divergence before. I didn't even see that, but the market just popped before. And that was actually a kind of a little divergence there, and it had a nice push, and now it's kind of just drifting here. And now this is the overnight trade, but we're going to show you tonight the today's trade and the opportunities that you could have had if you were watching it, and the the tough areas, and just basically what I like to call a play-by-play recap of the markets. This is all these blue lines you see on here, and again, I'll get rid of these banners on the bottom here. I'll just let you remember that there is a new 90% coupon out for the Bullinox, which is a good coupon. That brings the your 25K account down to $14.50 a month, which is incredible. 50K account is like $17.50, and the 100K account is just $21.50. So that's really, really good coupon. It's DTR90 is the code, and the DTR Apex is the Apex code. They always have nice promotions going. Right now they have an 80% promotion, but it's a one-day qualified. That means you only need to trade one day. And, lots of times you have to put in multiple days of trading to qualify. It's one of the requirements. But Apex is very known for doing one-day challenges and only qualifying one day if you want. You could take as much time as you want, but if you do it less than a day or whatever, you could send in your account and basically get a funded account if you did it. And sometimes in that when you're dealing with that 25K account and you get a nice run on it, and we have a nice divergence, it's not that hard to do. Again, it all comes down to being in front of the market. Now, these blue lines you see here, and this is what I do each day, and this in case this video might go outside the boundaries of our community base and our membership base. So if you got this, we have a great membership at Day Trading Radio that includes so many tools and chat rooms and the bots and scripts and stuff. You just have to go, and there's a free trial over there, so you could actually go over there and at daytradingradio.com. There's a banner there for its 10-day free trial. You can try it out, and you should try everything. All right, so we start off the market, and again, this is a video that we're going to focus on the futures. We woke up this morning, and again, not to mention that we do have a lot of news in the recent time frame here. There's a lot of news that might be affecting the markets. We're starting to enter into earnings season, which is usually pretty good, because we could actually get some good moves after hours on the bigger, like the tech stocks tend to move the NASDAQ pretty good. Even a big, heavy, like in the video stuff, could really move the NASDAQ after hours. So it's kind of a fun time to trade. So let's get back to the chart. So as a play-by-play, we're kind of just talking about, the methodology that I teach, or the style of trading I teach, and understanding and how it melds so good with the prop trading, because this is a perfect marriage. And that's why I kind of promote the prop trading as a good way of starting, because if you could master the techniques and master the setups and take the positions and have the discipline to get out and have the discipline to get in, and you could do it on a prop account and qualify. First of all, you're not using your own money. and you proved yourself without putting your money to risk, which a learning curve in trading is an expensive one. All right. So that's one of the reasons I love the idea of, the prop accounts. It's very easy to start. I'll put some information in the bottom of the in the video description to give you a page about it. So these setups that we call out during the day are what I'm looking for. These are money-making setups, and it's down to a point where we know what works so good. We have a hard time just waiting for that, because that could be a boring day. And as traders together, and you're sitting in front of the computer all day, it's very hard not to just say, all right, is that something I want to take that? Oh, I want to take a shot. I got to be in it to win it, and talk yourself into trading. The truth is, the real successful traders, won't have wasted trades. They won't gamble as much as an expert, just like a professional card counter. They're waiting for the proper time to start betting. And that's how you become a professional gambler. You don't become a professional gambler putting the money into a slot machine at any time, or just taking a random game of high-low or something like spinning a wheel. You want to have the odds in your favor. You want to have the dealer to have a 5 or a 6 up, and you have a great hand, or you could even double down. You have a nice, whatever. I'm not a big gambler, but I know how to play games like that, and it's game theory and stuff. So very important to apply all that. I mean, if you're going to be the best at doing something like this, it's like, can you go into a casino and extract that money like a professional gambler that eventually, they're going to want to try to get out of there because they don't want to get raked? That person has extreme confidence and extreme a method that he sticks to. That's why he's able to do this. He has a method. And he sticks to it, and that's it. And there's probably a set of rules that he has to abide by, and only certain people could do it because you have to have that mindset. And the same thing for trading. Trading is the same thing. You can come in and take the money from the market, but you have to be in the right spot in the right time frame and not blow up before you have that opportunity. Don't get depressed before you have an opportunity, or gun shy before you have the opportunity. It's better not to trade to trade. It's more time out of the market is less money you're going to lose. Because you all know the whole thing is 90% of day traders fail. At least I'm saying 90%. It's probably, a lot of people say 95 to 98% of day traders fail. That's because it's such a, you're there's just so much danger. There's no safety net. Anything can happen. There's no rhythm or rhyme unless you follow something like I do, and we measure the market, and we know how algorithms work, so we kind of prepare ourselves for levels that are telling us, the signals are telling us that things are starting to reverse. That's the best you could do. That's really the best you could do, is to take the best opportunity you can that works over and over again, and make sure you're in front of it when it happens. That's the biggest thing. That's the one I lose money. It's because I missed a spot, and I said, "Damn, look at that! That was such a perfect setup. I would have gotten into that, and I won't chase it." I've done that a couple times today, and I've dealt with it. I have to deal with it as a trader. I come to live with that, missing opportunities. But also, I remember how well those opportunities are, and how good. And I'm glad that I missed them, and I'm glad it worked out, and I'm glad that it's cemented in the process, So our number one setup is the divergence. And even today, when we wake up and the trend is down, and we're already down like 30 or 40 points on the S&P, and the NASDAQ's down a few hundred points, and you feel wow, there's a little heat in the market today. This is going to get interesting. We actually had one of the first things I like to watch is an overnight trade to the downside. There's 2 times of the time I see reversals on this. Say the market is selling off overnight, starts mid-morning, European Open, especially if it starts at European Open. If it starts at European Open, when I say European Open, go to 3 o'clock, and then you'll see the volumes pick up at 3 o'clock. But if there's this started at 2 o'clock. The volume really started coming in at 2:15. So I don't know if there was some news at this point. I didn't really go back, but I'm sure you could find something, maybe something coming out of Asia. I don't know. Maybe there was something out there that caused a little little drop in the market, a volume spike. And the volume kept up there pretty good going into Europe. And then Europe continued to sell off. And when we say Europe, I'm in New York, so I know that European markets open at 3 o'clock, basically. And that's when we start to see. And that's usually a good time to trade. If you're able to be up 3 o'clock, Eastern Standard Time or whatever time you're at, 3 o'clock European open. Did I say close? I didn't mean to say close. If I did, European open is usually a good time to get a trade off. Between 3 o'clock and 3:30, you usually start to see a reversal or a divergence. And I would say that's a good time to look. So it's worth being in front of the market at that time. In this case, you see, we already started to see that selling came in. It was the GDP out of Taiwan, the CPI, core CPI. It was related to chips. All right, thank you very much. That was what it was. It came out of China. That's when you get, you start to know when the time frames are and when the markets are open. The Asian markets, 12 to 2. I know they do a lunch, but they have 2 sessions, and it's one of them's around, again, 2 o'clock. That's where you see a lot of news drop for that. European Open is, like I said, 3 o'clock. We usually see a level for that. And if the market continues to sell, this is the couple things that you want to know. So the market's selling off pretty hard, going into the morning. You wake up in the morning, you're coming in. It's kind of chopping around. It's not really not a V bottom or anything, but it's just kind of sideways. You're coming in here, scratching your eyes and stuff. Market sells off a little bit more, 7:30. This is probably when I start looking at the market. I come into the office around 8 o'clock, and I settle in, I relax, I get something to eat, and then I usually get on the mic at right around 9 o'clock. But during the time here, I'm sometimes, I'm watching the markets. At 8:30, you start to identify a couple of things when you're a trader. One of the most important things is to learn how to identify a proper channel, because most of the best setups come out of a channel. Channel is just recognizing a directional trade that stays within a boundary, kind of a range-bound trade in a bigger direction. So in this case, you have you have this channel that you could put a line here, you could put a line down here. You see the bottom line's lining up pretty good. And usually, if you have one line, if you have something that's lining up, you kind of make that parallel line and you drop it to the high pivot that you can see standing out here. And if it starts to match up down the road, then you're in business. It just automatically lines up. If I just drop that right here, and we came down, we have that 1, 2, 3 pattern right now, right here, and we pushed. I remember this. Well, do I remember that? It was 9 o'clock. We had something very similar later in the day. But the rule is, and there's a rule, and the rule is, if the market is trending down and you're inside of a trend like this, and you decide to take that position, you're trading against the grain right now. And most likely there's a reason behind there's pressure. And are you going to be the one who calls the bottom? Most likely not. So if the trading gods bless you with a little upside as you buy into whatever you get, maybe you have a quad rotation here. And that's usually a quad rotation. It's the only thing I would promote to take in a sell-off. A sell-off quad rotation, if you had to get in, at least wait for the 5 minute to be oversold, and that's their 60-minute time frame. If you have a quad rotation, which means all 4 stochastics are oversold, all right, all 4 stochastics are oversold, and a combination of another setup. So remember, I have that all written out for you guys. I want to show it to you right now, so it's on this video, and you have it. Let me see if this is divergence. Not that one. That's some good stuff too. Again, look for divergence after quad rotations. I'll get rid of those. I'm going to get rid of the those things here, so you see everything. There you go. 9-3 just shows you some interesting 1, 2, 3 channel lines are perfect trades when broken and retracement are broken to the original broken line. Running divergences. Not exactly what I was going to show you. I have it on another spreadsheet. not going to drag that out too much. I'll show it to you in a bit. But the fact is, the rules, I just made a set of rules for everyone. The rule is, if you're in a downward momentum trend here, you'll start to see, there'll be a couple things that are going to tell you that. First of all, your 60-10 will be heading down or will be dragging around the bottom. Now, we've seen strong markets, very strong market. We've seen the embedded stochastic, how the 60-10 on the buy side so much lately because the market's been so strong. Sometimes it's very hard to see the opportunity or when this is going to bang out, or kind of flatten out, because here you have a quad rotation, all right? You have your quad rotation, you're like, oh, this is kind of an interesting channel. There's something here. If I extend this down and this, I'll just put this up there. This hit it here, hit it here. You're starting to put that channel line. You said, all right, this is not a bad channel. It has a quad rotation to it. I want to take the trade. It's not a divergence, but divergences come after these. So typically you'll get a quad rotation channel line. The only reason I would take it is because it's on the channel line, or if it was on the 200 period moving average, or if it was on the VWAP. So those four indicators lined up with a quad rotation would be a buy signal. But if the buy signal comes in a downtrend, and this is down here, this is very important. If this is pushing down and you're in a downtrend, you're in a downtrending market, and you have to kind of judge the market. Like what's the feel of the market? Are we in a bigger uptrend or a bigger downtrend? If you're in a downtrend and you've been in a downtrend and it's not a divergence and it's just a bounce, divergence will be different. If you have a divergence in a channel, the channel will break, and it's very easy to identify. So here's a great example. You see this? This is a fantastic example. You have a quad rotation here. It's not a divergence. It's a quad rotation. You might argue with me and say that's a lip divergence. I might say, yeah, it could be, but I wasn't probably staring at that at 9 o'clock. But what I was staring at is the balance and understanding that we might get a fast rotation. And I think at this point we talked about paying attention to the rotation today. If you're in a downtrending market and you're inside of a channel without a divergence, you want to sell the first rotation back above 80. All right? So you sell there. And a lot of people won't. They say, oh, I'm going to get the breakout. But why would you? Are you that good that you're going to call a bottom in the market? Right, 1, 2, 3? No. Most likely, the trend is going to continue. This is an obvious indication that if you even look back here and look at every time the 9.3, which is our top band, gets up above the 80, we see some selling coming in here. Don't you think someone's plugged in the machine and it's doing the same thing out there, which causes this? We're on a level above and beyond. We're trading with the algorithms right now, and we're able to identify these levels possibly faster than the algorithms. We know where the algorithms are going to pick it up, so we see that divergence. I know when you have our own manual construction of these lines and understanding how the market works. We have the thumb. We have a thumb, and we have a mind we could reason. What makes us? But we also could, predict things well. See these things happen. I don't know if I would see that happen or an algorithm, but we know the conditions. I know the conditions. I know what to look for those bounces, and we'll get those bounces. But the hardest part is taking profits and being in there on the bounce at the right time, because you're wrong on the bounce. You're all of a sudden here. And then if you're not out here, you're back to break even, and you're like, I want to get my trade, and you start gambling, and then it ends up down here, and you start taking the losses. So to be so great at trading, you have to buy into that trend line on a quad rotation. You got to trust it. It's almost like doing the deadfall, falling backwards, and letting your friends are going to catch you. You got to take a shot because you're right on the edge there. You're right on the edge. It's going to get real bad. You're in a lot of pain. Everything's oversold, and then boom, it moves right back up quickly before coming back down. But if this was a divergence, I would say all aboard, we're going higher. Now, what happened was we came back down 9:15. I think at 9:15, I talked about this divergence on the Voxer. Let me see. what I did. I thought I did a good job on the Voxer today. I was trying to really be, really trying to give some good setups on that. I didn't want to throw out everything, it's just garbage out there. So I was really waiting for divergences, and we kind of had one right at 9. I think we sat down. Let me see. And I sent some pictures of it too. It was a really good one. Let me see. Maybe I don't. Yeah. Here it is. Wow, look at this. I just put out just a little post of that divergence on our Voxer network, our Futures Trade Alert network. I just posted that to the Futures Trade Alert network. So if you have that, just a good example of a great divergence, what you want to see in the morning at 9:30, especially 9:30. Oh, that was, that bounce here came up, gave us 10 points real fast. All right. Just an update here. That divergence here. That's a follow through? Hold on. Good morning, traders. We're about to open up here. Markets are down. And a pretty good way for the first time in a long time. But we're having possible divergence right at the opening here at 9:30 on the downside. We have a pretty decent trend that's developed. We're at 56.55 here, 56.55. Right here, it was. And we're just about to open. Yeah, we have 2 minutes to go. It looks like possible divergence, quad rotation here. I would buy it if we break that 20-period moving average above us, which is kind of right around that 56.57 area, 56.57. So I kind of put a buy there. It's going to be a choppy morning. Be careful. All right. Well, anyway, that was a good setup. So what I said was, buy on a break of the 20-period moving average. That way we confirm the divergence. Now, hopefully you understood that. We're looking for the divergence. We had such a tight trend line, but we had the divergence happening, and it was a steep divergence. And 9 times out of 10, if you have a divergence like this, you will break out of any channel you're in that divergence. That is your spot, especially if you have a channel. If you have a nice tight channel and you have a divergence, it always breaks out of the channel. I have never seen it not. I mean, unless the channel is really big and there might have been a minor channel that you didn't consider. But if this is a tight channel that matches the divergence perfectly, it gets some jet power. And it's also a quad rotation. So you have the divergence on the 9.3, 14.3, possibly even 44 if you want to stretch it, but that's a little under 20, but it's 60 So this gives us our quad rotation divergence. That is our number one go-to trade. And I tell people, if you just want to make money, that's what you should wait for. Everything else is going to be a gamble in the market. See the angle of this? This is above 10 degree angle, and that's kind of a little advanced class on how to measure out the stronger divergences. So then we had a little bull flag here, and we talked about this. I said, watch this pullback here, and I know I was marking it off because I mark everything off real time so we could go back and look at it. And we're holding the 50-period moving average. We got back to the 20. It triggered as a 20, and this was not at over 80. So we had but it was just starting off. The market was just starting off, so we just didn't get there yet. So we started watching this, and right when that ticked at 80, we took the trade. I said, if that gets back above 80, and it was going up above 80 when this was going down, like for a second. Where was it? Yeah, like here to here. This it started turning about 80. Right when I noticed it was above 80, I took the trade, and we got that pop. Now it popped right up to the. I don't know where I took that off. I probably took it off on the first pop. I have to look. But anyway, it moved right up to the VWAP. And the VWAP, again, if you're going to have a couple lines, if you can only put a couple lines on your screen, put the VWAP on there, put the 200, put the 20. I don't have any wasted lines. We use all these lines. The 50-20 is great for flags. It's our 2020 bull and bear flag. A moving average is considered an indicator for me. All right, when we talk about indicators, we need 3 indicators to be a high probability setup. we have 5 basic indicators, and our foundation is the stochastic. So above the stochastic divergences, the coils, the quads, these are the things that stochastics do on their own. All right, we add the other setups along with it, and these make our, super signals. So and if you have any questions in the room, please feel free to ask, because I am kind of going pretty fast here. That is the money-making trade. This is the money-making trade. This is on the list too. If we were looking at 3 different type of trades, we'd be looking at a divergence, a flag, and a trend, or a channel line bounce quad rotation, or any type of quad rotation with another indicator. Now, this is a blue line we had. This is another interesting thing. We put this blue, I put that blue line in after this. There was another, not blue line. Well, yeah, this line was here. This channel line was here. Look what happened. Look at what happened. Broke out, eventually came all the way back down right to the same channel line. Boom, boom, boom. It just hit it perfect. We came right down to it. That was just, again, close your eyes and buy into that. When you get a quad rotation and a previous trend line, that's a signal. That is, you have to take those trades. You have multiple indicators lining up. That's considered a playbook trade. Anything with a quad rotation that's significant, you need to take. The divergence, of course, is our holy grail. So when we have a quad rotation divergence, that tops everything. That's when you trade the ES. You switch over to the ES. Stops are already defined underneath the stop there. All right, and then market here it gets the pop, starts to rotate back down, and it starts getting very annoying at this point. When I say that, and we're watching it, and what I'm trying to stress to most of the people in the room is to be super careful. And if you are taking these trades, look what the history of this stock has given you today. And I was going to look at the history. You look at this, and I put this yellow line. You can see the beginning of the yellow. Normally it's dotted back here, but right here you can see I put it up there, and I said we're going to watch this line today. We're going to watch this line, and if we get over there, you should be selling. If you're holding a position and you get over that line, you most likely should be selling. All right? If you're going to be a scalper today, because you're going against the grain. Unless you have a divergence. And if you have a divergence, you're going to get a bigger move. And that's exactly what we talked about today. Because we had this trend down. It was you just didn't, it felt like the market wanted to pop, but, that was each time. Now, we go back here, and I put a line in here. There's our oversold, and you can see from there down to there, oversold. Now, I put that line in specifically to make sure we get to it, and you can see it above it right here. Even a small little bounce there got sold into, all right? And that's not a bad pullback. Again, anything above $20 is a keeper. And then you got a few contracts on this, and it's low risk because it's, you got you're on the right side of the trade, that makes a big difference. When you feel like you're on the right side of the trade, you got the tide on your side. Here it goes again. You get down here, you get that fast little bounce. It gets overbought, and then it comes right back down. Very hard. It tries to go again. Gets overbought, gets rejected one more time. Right there, right when it touches above the 81, it gets rejected one more time. Now we're able to put in a channel line here, and we extend that out because we have 1, 2, 3. This is our third one. It's really pretty good. Now we can see this trend line really starting to hold. But it's still an ugly market, ugly, not, sideways chop, trying to say don't do much. If anything, be with the trend. We had a flag here, pushed back up here, got back into overbought level, and then rolled right over. Quad rotation here. Quad rotation turned fast. All right, so this is what we're talking about. If you happen to get into something and you say, all right, this is a little pullback, looks like I was explaining what, we don't see good examples of bear flags as much. The market's been going up. So at this point right here, it's very important to have that flagpole on a flag. And a flagpole is just the price trading away from the 20-period moving average. So there's a big gap there. And then it starts to drift back. And it drifts back, and this rotates really back fast, and you kind of close on the 20, under the 20. If the 20 and 50 are together, it's usually, they both hold significant power in this. The key is just kind of, does it look like a flag? Does it feel like a flag? What's the bigger trend? The fast rotation above 80 is your main thing. This is embedded down here. It's 18. This is an absolute flag. It's an absolute flag right here. So that flag breaks down and continues moving down here. Now we have, I don't know if we were looking at a quad, something here. I don't know what we were looking at, but it did get a little bounce. Then we came back down. We looked at another quad here. It was just a quad. It wasn't anything else. I remember I put these quads in here. There was a quad that we announced here. There's a quad that we announced here. It moved a little lower, eventually popped. Quad that we announced here. And then we had a sell divergence here. Sell divergence. It was a nice higher high, lower lip high. I don't know if anybody got in that. We did call that one. And that was another nice channel. So once we start to identify that channel, then you can start saying, all right, what do I need lined up here? I'd love to get divergence in the channel. Was that a divergence right there? We were measuring it was about 7 degrees. It was kind of borderline. I hate those because you want to have the big divergence like we had back over here. But if all else, if you feel the urge, at least, make yourself believe that it's divergence. Give yourself a little chance. I don't know. It ran. It just did. It popped. This was nothing really here. I thought I was looking at a sell side divergence, but there wasn't anything. Either way, it did pull back from this level. And look at this, another tight channel. Today was the day of the channels. A lot of channels. Channel here, downward channel here. Every time we, kind of establish a channel, we're always looking for something to break us out of the channel. In this case, it just broke out, and then we had another rising channel, then a breakdown. Now a bigger channel. Not much going on. This is at the close, and that was it. So, to be serious, if you traded over, I'd give you a benefit of the doubt. We go all the way out here. I mean, that was a nice divergence. That was a nice flag. I would take that. I would probably take that. 2, 3, 4, maybe 5, maybe 6, maybe 7, 8. If you just, this is taking a very aggressive. If you want, I wouldn't call this one. And I think I hate 3 o'clock trade, and I wouldn't call this one either. But it's a nice channel. And I don't know if there was a divergence here. Something there. Anyway, that was it on the. So maybe you take 10 trades out of this. 10 trades. Market's pushing up a little here. But you have to, it's easy to look back at this. It really is. I wouldn't even take that many. I would think you could, these are the ones you should not miss. Let's just talk about what we should not miss. What I should definitely get out to you, that divergence, the 930 divergence, very key, high level divergence in that. Pretty excellent flag right here. I was reading that flag really good. Right when it started turning back up on the 60-10, we jumped in. It was a nice flag. We didn't have any more divergences. I think there was a little lip divergence somewhere along the way that someone was mentioning, but it wasn't too obvious. Maybe it was here, 2 o'clock. So only 2, 3. I mean, that's as a beginner trader, I'd be happy with you taking that many trades, maybe 4 trades. 4 trades that are high probability of success trades if you establish your You get in and you put your stop down there. You're gonna you can see those did move in the direction, and they were the best setups. You would have made money on them. Less training is better. So that's kind of a little review of the day. I was looking at. I want to bring over the bot here. This was up today. It was on the ES, and I want to show you what the bot. It was up nice. I don't know what it was. I could see green in my screen. Now the bot is the rock bot, which is a script that I run to identify these setups. But it also I noticed that this had a flag on it, so I have a couple of scripts running on this. I have the bull flag, and I have the quad rotation. It looks like I don't have a cell side divergence on this screen. So I wanted to talk about the bull flag for a second, because the bull flag, remember we talked about, we're looking at that bull flag on the screen here. Let's see, that was 1810. It was a nice bull flag too. Wow, look at that. Let's take a look at that. 1810, it was right after 610. Let me see if I could find that. What the hell is I went the wrong way here. Sorry. I'm all over the place. I think I have to go up, right? Just curious. What is that on? Not 1610, 1810. That's 610. All right, I see what it was. All right, so I'm looking here. This was the flag. So what happened? What happened was you see what's happening here? Our flag technique is, the way I have it scripted is pretty exact. It's, we could call a flag maybe a little bit better live. I could call it a little bit better, but it won't. This will identify you to the flag the way I like it. The original script on this is just a pure flag script, and it's the fast rotation under 20, this holding above 80, and this holding above 20. There's different variations of flag, but this is one of the stronger flags. So as you can see, that's exactly what that is right there. That flag here, this is transferred over here. This script is the super signal script. So the super signal script looks for the quad rotation divergence. Now, it's a mathematical divergence on this, so it's always a candle before it takes a candle to qualify or to confirm it. And you're looking at that lower than the low, but the stochastics at that point were a little higher. Now, programming this is a little tricky sometimes because I don't want to make it too hard to get them, So what I did is I added the quad rotation. That eliminated a lot of junk and chop, and now that's why it deserves the name of the super signal, because it truly is super when it works. when it does its magic, it does its magic good. So again, when you run these scripts on your machine, if you do it, you could actually get these scripts at Day Trainer Radio, the membership. You get the scripts. You can run them on your, they run on the prop counts too, but you can use them. How I want people to use these scripts is to let them take the entry, identify the entry, and you manage the trade. Because there's a lot that goes in with scripts like this. You have to adjust the parameters, and the parameters have to be adjusted to market conditions. And we talk about market conditions. What are market conditions? So I have my parameters here on the script. I have the flags, and I go to my quad rotation. And then I'm going to just turn it off so that way I can see my parameters. And this is my parameters right now. So I want to make sure that that my parameters meet the market conditions. especially if I'm trading in a downward market. I'm not going to get the bounces that I'm typically going to get. So I want my targets to be smaller. So this is actually set pretty good as we see. It might, we might even miss some bounces. Each one of these, I'm not going to make this a video about the rock bot, but each one of these is where you want to take profits, how many you want to take off, the next level you want to take profits, how many you want to take off with your stop loss, trailing stops, and everything is adjustable. So you could make this work in any condition as long as you measure that condition out, understand what work with the markets, do what the market's telling you to do. The market's giving you a little every time you get a fast rotation, you should be out. Then set the bot to see that. And I know that's hard to do on the fly, very hard to do on the fly, but it's good on days like today was a good day for that because it was a strong trend to the downside. So each one of these, even though, look at this, each one of these, even though they were quick, they were enough. We were enough to get out. And again, remember when I talked about getting out on an 8, the 9-3 stochastics, getting out above 80. Remember when I talked about that? That's how important. That's called my safety net. You have to, if you're in a downward trend, close your eyes and sell if you hit the 80 line. Just do it. You'll make something. You keep on making stuff that way. If you're a minute too late or something like that, you're going to hold on. This is probably the direction the market's going to continue. Now, the other thing you do, if this is laying down and this is pushing up, this is a bear flag. So you short up here. So you have two ways. If you do get the divergence and you get a bounce and the market's down, make sure your parameters recognize that. You're not going for a bullish, bearish, or bullish run here in the market. You're expecting big moves on the ES, and big moves would come with big upside moves. Strong trending markets down give you small bounces. Very strong markets give you small pullbacks. So if you could recognize a small bounce and you want to tackle that trade because it is counter, it's going to be a harder trade to deal with, then you adjust your parameters for that. And just say it, what the F. Just do it. And again, it requires that. I'll take a look at the bearish divergence. Yes, it was a bearish divergence. So again, you can see it nails these bottoms so well. Now this is running on the 1 minute time frame. It's running on the ES for those out there who have the bot. All right, more information in the description of the video. If you don't want to have the bot, you need information on how to get it. Someone just asked me, and good call. Sorry I didn't get to that a little earlier. You see the yellow line here, right? That yellow line represents that 80 line. I just lost it. Oh, no, I didn't. I just put it perfectly on there. You see how that little lip is underneath 80? There was a high here, then there was a double top here. But that double top was met by a little lip. It didn't get all the way back above the 80 line, which is perfect. That's what I like to see. Stage 1 above or below the 80. Stage 2, the opposite. Stage 1, in this case, above the 80. Stage 2, below it. On the buy side, it's going to be the opposite. It's going to be stage 1 under the 20. Stage 2, it's going to hold above the 20. Good call on that. So that's it on the review. There was one more thing I was going to mention, but I will get this on its way and then see if we could find a trade here, because the market actually is giving us a little pullback, a little rotation. A lot of times overnight we could watch that quad rotation too. If you happen to be a night owl like me and you like walking around, 2 o'clock in the morning, keep your computer on, because sometimes you see a nice divergence or a quad rotation, and it's especially with the profit counts, you're not throwing real orders on the book or on the table. They're ghost orders, and you won't affect the market. So it's kind of like you could slide in on light volume, and these things work on light volume. Here you had a little divergence. You had a nice little pop here. Here you had you had a double top divergence. Someone called out. It's a good call right here. And look at the move. It's a much bigger move than it was doing. You're gonna get a bigger reaction. You might even say, all right, where's my channel on that? Maybe that was the channel. We did break down to that. It's hard to say that. I'm not gonna blow smoke. All right. So the path is set. You have to be there. You have to be here. You have to be ready. Focused. Laser sharp focus. Laser sharp. The bigger setups will come. I don't want to get off the mic yet. Because, what we search is the great white whale, which is a classic divergence, a 5-minute divergence, a bottoming divergence. Our divergences between 9:30 and 10:30 sometimes can be very good divergences. Divergences on the 44, I would consider the white whale. 44 divergence, and you probably know argument right here of a divergence right there. And of course, that did explode. So that's what we like. You see that look? Just remember that look. Print that out. Put it up there on the board next to whatever you have on your boards these days. Who's the? Well, I better not even say anything because I can't say sex symbol. I was going to say who's your sex symbol, but I don't want to get into that. I'm not even. Am I in trouble for saying sex symbol? Did I symbolize someone? Oh shit! I'm going down. I'm going to get off the mic here now. I got to hide everything. I'll see everyone in the markets.